Welcome to The Liquidity Event, a show about all things personal finance with a laser focus on taxes, financial independence, and equity compensation. Hosted by AJ and Shane of Brooklyn FI, each episode will focus on a personal finance topic, some driven by news headlines and sometimes driven by listener questions. And sometimes you'll just get two money nerds rambling about what they think is interesting. Just a quick note before we get started, this podcast is for informational purposes only and should not be considered tax or investment advice.
Hello and welcome to the Liquidity Event. I am your host, Shane Mason.
And I'm Ethan Burrow.
And this is episode 196, being recorded July 22nd, airing July 23rd. Email us your finance questions at liquidityevent@brooklynfi.com, and we will answer them live on the air. We have Mr. Burrow on again this week. For those that don't know, our typical co-host, Mrs. AJ Ayers, Ellie Jane Ayers, had a baby. I don't think we've mentioned that yet on the podcast. Maybe we should have announced that about a month ago. And she's going to be on maternity leave until, I believe, early September, depending on how things are going. So you get the joy of your boy, Mr. Mason, as well as various co-hosts over the next couple weeks and months. Excited to have her back. Everything's healthy and happy in the family with Mrs. Ayers. She's back in Brooklyn. And everything is happy and healthy there. So send her your wishes if you didn't know about that. And she would love to hear from you. Mr. Burrow, how are you doing today, what is it? Senor Mahi Mahi.
Senor Mahi Mahi.
Gotcha.
I don't have the Spanish keyboard, so that's what I had to go with. I'm doing great. Another day in the life. It's Wednesday. It's hot as hell here. So having to do everything I want to do it in the morning because it's the heat waves hitting hard in the south, as it is, I think, everywhere.
Yep.
We're not burning, which is great, like
yes.
other parts of the country.
Right.
But it's still uncomfortable when you go outside.
Yeah, thanks a lot, Canada. We're blaming Canada for the worst air quality index of all time. The USA had nothing to do with that, by the way. So
No,
should we invade
nothing.
Canada? We're going to talk about
I think it'd be a tough land war.
you think so?
I think it'd be a tough land war. They've got some pretty insane terrain. I think there'd be a lot of traders, going to the other side. I don't think it'd be as easy as people
But they're
think.
all
I
on
mean,
the
we're not
border.
doing.
We just need to go. If we got the first 10 miles all along the border, that would be it, wouldn't it? It would be game over for them.
Yeah. We're having a tough time with Iran, so I don't know how well we do with Canada.
A tough time. Canada, we joke. We love you. Please don't smoke us out anymore. So yes, it's hot down here as well. So we are. I'm in my Senor Banana shirt because it's hot as hell down here. We're also we're recording this late in the afternoon as opposed to in the morning on Wednesdays, and so we are bringing back a liquidity event tradition in that we are enjoying some liquidity events here. I have a gin and tonic. Mr. Burrow has a Pacifico.
I have a Pacifico. Oh yeah.
We should trade. That would make more sense. On this week's episode of the liquidity event, we've got an AI backlash from the Wall Street Journal. It has tech executives fearing for their lives. We're going to talk about some threats that they've been experiencing from Americans, etc. Trump imposes a 50% tariff on Canadian goods. That shows them right for letting their trees burn. Blockbuster stock sales. This is not about the physical video rental Blockbuster. This is about there being a lot of stock sales by public companies are threatening to overwhelm the bull market by putting pressure on supply. Two charts show just how brutal the last 3 years have been for working moms. We're going to be talking about how moms with children under 5 years old have been experiencing a downtick in employment because they can't find childcare. The man who runs the IRS spied on colleagues when he worked at JPMorgan. This is another fun Wall Street Journal profile on the IRS commissioner. And then we have a Reddit article about the experience with private market funds. Somebody wants to know if they should get involved in some of these high cost funds that allow you to get access to private companies because it's not, there's liquidity issues. So they need to get a intermediary involved, but that also means that there's more fees involved. Mr. Burrow, how's your week this week? What have you been up to? What would you do over the weekend? Where in the world? It looks like you're in Oxford, Mississippi.
I'm in Oxford. Over the weekend, we didn't have anything planned in July after having a very busy early summer, which we've been enjoying.
Did you see the Odyssey?
Lightweight.
No spoilers.
I've not seen it. Planning on seeing it hopefully sometime this week. I tried to book an IMAX seat for it, but the closest IMAX theater is in Madison, just 2.5 hours away.
Wait,
So I'm
Memphis
not
doesn't
driving
even have one?
no, Memphis doesn't even have an IMAX. It's
Oh,
either drive to Nashville or drive to Madison. Both places I have no interest in driving to. So we're going to see it on regular theater, and then everybody's top of their heads is going to be cut off. But I can just live with that. It'll just be part of the experience.
you should see it how Mr. Nolan intended, which is the back seat of an airplane monitor.
Yeah,
Sound,
how all of
with the sound of the engine just buzzing through the audio, so you don't understand a word they're
I'm
saying.
I'm hoping that the sound mixing is of a better quality of Tenet because I remember seeing that in movie theaters, and I thought that I was getting shot at and you couldn't understand the words because there was just so many explosions happening at the same
I
time.
gotta say, Tenet, bottom of the list for Nolan films for me. Just beyond that, Memento. I don't know. Anyway, so I did see it. No spoilers. It's fantastic. Our producer Ariel
Good.
also loves it. I did see it in not the 70 millimeter IMAX, which I really want to fly somewhere to go see that, but Mexico does not have one of those. I think there's like 14 of them in the world, which is really cool. The Chinese theater in LA. Any of our listeners in LA? Apparently, California has the most IMAX theaters of any state in the country. So Blue State.
That makes sense.
Premium there.
Checks
That's
out.
what you get for your 70% taxes and communist dictatorship that you have there in California. That's the trade-off. Okay. Sorry, I've waxed poetic. Enough. Let's get into the articles today. AI backlash has tech executives fearing for their lives. This is a not so fun article about how brand AI has turned a corner, and instead of all of the fun chatbot stuff we were experiencing in 2021, 2022, or did it come out? When did ChatGPT come out? Was it during COVID? Or in COVID, late COVID, we'll call it. Postmodern COVID came out. Everybody was excited about playing, getting songs written in like a pirate had written a song about their friends or what have you. Now we're in a place where software engineers are losing their jobs, designers are losing their jobs, and we have a lot of AI and really just any tech CEOs hiring a lot of bodyguards. We can see this reflected in the P&Ls of public companies, the amounts that is being spent on security for tech. Tech CEOs has doubled or tripled or quadrupled in some cases. Alex Karp, Jensen Huang, Sam Altman had someone throw a firebomb at his house over the fence. Well, he had a baby and a husband inside the house. Ethan, what were your thoughts on the threats coming to these
I mean,
agents?
it's really sad that people think that those are the solutions to their problem. I mean, I think also with the guy who assassinated the healthcare CEO in New York, I think also has played into a little bit of their fears. Is that seemed like it was celebrated, and I think it scared a lot of people.
Luigi.
And in the spheres of like the ultra powerful controlling these Fortune 500 companies. I think it's sad that that's happening, but also like you see these people's quotes and like you can empathize with their desperation, maybe not with the acts of violence, but like the sadness that they're having from losing their jobs and stuff like that is understandable. Throwing firebombs at people's homes, I think, is a good big leap in the wrong direction. You also see this a lot with, the flock cameras isn't quite AI, but it's gone in a similar vein of people just cutting them down with hacksaws, and then people trying to break into the flock headquarters. Just the whole DeFlock thing is also seemed to catch have a lot of momentum recently. So it's sad. I'm not surprised.
Yeah, I mean,
kind of scary though.
Yeah, there's even just regular employees of Anthropic and OpenAI are being threatened. I wouldn't be surprised, like if you were just on the streets of San Francisco and you had your vest on and it had the Anthropic logo or the OpenAI logo, I could see people confronting you. Especially, I met someone at Flock. I was at a conference just yesterday, and it was a equity compensation conference. So it's essentially like HR people. And she told me she worked at Flock, and my initial response was, "Oh, I probably wouldn't tell people I work at Flock because they are experiencing." Have you heard of these Blade Runners around London that are?
Oh yeah, they go down with hacksaws and just chop down the poles.
The poles and just run away. And because there's Flock cameras, they're like all being recorded, and so they're like anti-surveillance. It's an interesting thing. The lower tier, like the proletariat, are not not having it. They're rising up, and it's something that you might not want to advertise where you work at so heavily. But at the same time, these are just like HR people, so I don't know. But the what else is going on? There is a company that tracks online threats, and I believe there is a sevenfold increase in just I think it's called LifeRaft. CEO says that there's a sevenfold increase in the number of online threats against these employees. So just people like in the comments on message boards, probably Reddit, what have you, are just there's a big uptick in anti-AI speak, and there's people are going for the pitchforks here. There's a bus apparently out on the streets of San Francisco, which is not the safest or like the chillest place to hang out. I was there on Monday. I've been to a lot of cities, lived in roughest parts of New York. Yeah, and San Francisco streets, if you go down the wrong street, not a pleasant experience, not what you'd love to experience. So they have a bus on the street, and apparently they've been threatened nonstop, and they have got, quote unquote, very thick skin now because they are an AI HR company called Corgi with a big bright orange bus that's just parked like a food truck right outside of their headquarters. So they're asking to have stones thrown at them with that bad boy.
Yep.
Alex Karp, also CEO of Palantir, not pulling any punches. He says whatever the hell is on his mind, for better or for worse. It seems to have worked for Elon, and so the cult of brilliant tech CEOs. I think Alex is like using that playbook and not pulling any punches, even publishing books about like the technocracy, et cetera. Anything else you wanted to add on this article? This is just a little warning to those working. I'm sure there's internal publications of these companies too, like don't advertise who you work for, where you work, any private. Don't dox yourself. Essentially, try to keep yourself safe.
I mean, the shift I think is very strange. Not strange, but like I think you had asked this question 3 or 4 years ago, and these people are happy to wear their company garbs, like their company Patagonia sweaters and stuff like that. And it's just a complete 180 of that. Like now you definitely want to conceal where you're working for.
Yes,
or who you're working
if you
for.
go look at the sentiment around AI, it has the people that approve of it have dropped dramatically. It's done worse than Figma stock, or if it was a stock price, it would have gone from $80 down to like $6. Like it's getting beat the hell up. There was a story in here about a designer at a tech company that was fired. I believe it was, I forget where it was, but they posted a big block after they were let go in Slack about how we should not let the robots replace us, and it got thousands of hearts and smiley faces, etc. But it's a very like who's coming with me moment, or don't let the robots destroy us. One of my favorite quotes in here was a reminder that the Luddites were very violent people. So
there's some good quotes, from some pretty disgruntled people.
Yeah, cool. So and there's also not to be, there's people that are sending in job applications to Anthropic and then like trying to weasel their way into the physical building as well, and like having manifestos that are getting caught. There was one guy that tailgated into Anthropic's buildings. Like I'm sure the security is going to get beefed up. There's also a lot of fun stuff about here, the choices of bodyguards that the tech firms are going with, as opposed to
sleek, slender, chic.
Yeah, and
I thought that was pretty funny. I guess they want them to blend in with the tech bro vibe, and they don't want them to look like. I'm thinking bouncers. I'm thinking like black white beater, maybe an earring, some funky Oakley sunglasses. Like no, you better be in like one of those flexible suits that you can do a backflip in. I guess is what their expectation is.
Yeah, I went down a rabbit hole one time. I listened to a bunch of like the Sean Ryan podcast, like I don't know, like a few hundred hours of it, and from what I could tell, all of the scariest special operations guys are all the smaller ones. Like they're the ones that have the wildest stories and the ones that you should truly fear. It's not typically the guys that bench 400 and squat at 1500 and weigh 260 or what have you. It's the little guys you got to watch out for. So maybe they did their research as well.
Mike Vining, I think, was like the genesis of Delta, and he's a nerdy dude with glasses.
Finally, we can talk special operations on the podcast.
But I mean, there's some famous pictures of him getting out of like an airplane or a truck, and dude's wearing a collared shirt and those big, huge aviator, like prescription glasses. And you're like, who is this nerd? But then you're like, oh, that guy's real deal.
Yeah, legendary. If you want to see the best dressed secret, like undercover guys of all time. I believe it's the Reagan Secret Service when there was an attempt on his life, and they were all wearing like bow ties and like knee-high socks, and they pull Uzis out of these suit jackets. Well,
When they pull the Uzis out, the Uzis are sick. When they pull those out of their suit jackets, that's like an Arnold Schwarzenegger action flick.
yes. Okay, cool. Speaking of the military and Canada or what have you, Trump imposes a 50% tariff on Canadian goods, citing disputes over autos, alcohol, and cheese. Speaking of the Odyssey, my Nolan and Homer fans will get that reference. What are we doing? We're back to tariffs. I thought this was already turned over. I thought we couldn't do tariffs. Didn't the Supreme Court decide that we're not going to do it?
Now they're just finding other avenues to implement them, apparently.
Yeah, Trump's using a law from the 1930s, Section 338 of the 1930 Trade Act, which is almost 100 years old, which doesn't mean it's bad. I mean, the SEC rules came out in 1934, and we still lean on those, and those are fantastic laws. But he's leaning into a 50% tariff on most, quote-unquote, Canadian goods, declaring that Canada has unfairly discriminated against American autos, alcohol, and dairy products. Okay, well, a little background. We had the North American Free Trade Act in the 90s and the 2000s, which got overrode or reconfigured into the United States-Mexico-Canada Agreement, which the Trump administration of 2016 negotiated, and then the trade pact was not renewed by the U.S., which triggered a new set of negotiations that could run until 2036. So we're like in between. NAFTA didn't work out perfectly for everybody, so we need to renegotiate these items. But it looks like free trade between our neighbor to the north is not on the table. What's your takeaway from this? What are we up to here?
I mean, I think most recently Nintendo came out and said they had no obligation to refund the tariffs that were refunded to them to their customers. It's evidence that like the consumer is going to pay this, and then if they are ever found out to be illegal or unconstitutional to enact them, the companies that are going to get refunded are going to keep the money. They're probably going to keep their prices the same. It's not really helping us at all. It's increasing prices. It's destroying relationships between other companies. Not a great look. I did think one thing in this article was pretty funny. They were talking about how Canada's treatment of U.S. cheese seems like it's discriminatory compared to European cheese. And in my head, European cheese is just better cheese. Like we don't have Parmigiano Reggiano. We don't have that good Irish cheddar. Like we don't. I mean, like we got Wisconsin, but like we're not Parmesan wheels. Maybe they just like their cheese better. I think that's like totally okay.
Yeah, we're not.
We don't have to.
Not the kings of cheese here. I know we don't. We don't have the caves.
I'm sorry for our Wisconsin listeners that if there are any, we are not the king of cheese.
We don't know anything about our listeners. All we do know is that every conference or client event we have a handful of people that say we love the podcast. We don't know if they're blowing smoke or not, but we still show up every week and serve up the silliness. That's what we're here for. So yeah, I don't know. Like, we should clarify that he uses this tactic to kind of get what he wants out of trade deals. The tariffs aren't in force yet, so we have another 30 days until they're actually enacted. But I don't know if we'll get another Trump always chickens out, the taco situation. I don't know. I don't know why we're bullying Canada, of all people, who we just co-hosted the World Cup with. We shall see. All right, let's move on to the next article. Tariffs are boring. A Blockbuster stock sales are threatening to overwhelm the bull market. This is an MSN article, which is a terrible news outlet. But we're still, it's an interesting article because we have one of the highest issues of stock, new issues of stock since 2020 and 2021, when valuations were also through the roof. And for our dear listeners that don't realize this, you can, as a company, you don't just issue stock when you have an IPO. You don't go from owning 100% of your stock to 70% because you've allowed 30% to go out into the public market. You can also then sell an additional 5%, so to speak, or to use an illustration, and then go to only owning 65% of your own stock, and then the 35% is that additional 5% gets floated out there as like a secondary offering that goes out to the market. This is really a great way to raise money if your equity value is super high as compared to your earnings. So like you'd be silly not to sell some stock so that you can use that money to reinvest in the company. Now that is the opposite of what a lot of people have probably heard of called a share buyback that a company will do when they think that their stock is inexpensive. and they think it'll go up in the future, so they'll buy it back, which will put upward pressure on the price because it increases demand. We have the opposite happening here, and this article is trying to argue that because we have additional issuances, aka additional supply, the demand can't meet that supply, so it's pushing down the values or the prices, which could be good, could be bad. It's probably good if you're a buyer, bad if you're a seller of stock in retirement. One other item to note is that we've been on a 3.5-year bull run, so ever since the pandemic's correction, which was kind of quickly corrected, back into a bull run. It did interrupt our historically long run post 2018. Ethan, what were your thoughts on what's going on with this article?
This article I thought was interesting because at the very end of the article, after it's talking about how this could be a sign that the bull market's ending, is just like they put in a quote that says, "I don't see prominent excess and our economy feels pretty good. I think it would be a folly to predict a recession anytime soon." So it's saying like these things are happening, maybe a recession, and at the end they're like, "Oh no, never mind. We're chilling." So, I mean, it's interesting. It's fun to read about. I think with like the IPOs that we've had recently, especially with SpaceX, there's been a lot more buzz around the market than what I feel like I normally see in terms of like people who aren't actively involved in keeping track of the market. I've like friends talking to me about SpaceX IPOs and things like that, which has been interesting to see other people get into it. They're talking about the other indications of like what else needs to be in place to start a recession or to start to end the bull market, and a lot of them are saying that it's not in place, that the total market valuation is huge compared to the additional stock that's in the market that's being added to the market. So
yeah. Yeah, well, one fun way to think, I mean, you gotta think about your denominator when you're looking at your numerator here, because in this numerator we've got $300 and some billion of additional stock issuing, 350 billion. Now, if the whole stock market was worth $1 trillion, that would obviously be cause for concern. Well, the actual entire U.S. stock market is worth $80 trillion. So if we do pump an additional $350 billion of supply into that, what percentage of additional supply is that? Like if you got $100 and then you get another dollar, or like another dollar enters the market, what is it? So in this case, I just ran the numbers live on the pod, which you should never do. But the 350 billion is only half of 1% of the $80 trillion of the current market. So it'll have an impact. The size or the magnitude of that impact is under question. And I think that's why what you just said is fair to say, is that this probably won't derail or steer the ship in a different direction, but it is something that allows you to publish an article, something to watch out for. You know? Let's get to working moms. 2 charts show just how brutal the last years have been for working moms. Ethan, this is an article from Business Insider that shows that there has been a downtick in the participation of working moms, with some bifurcations between children under 5, working moms with children under 5, children between 5 and 12, and then also men with and without kids, and same metrics. It looks like the people that are working the least are working moms with a bachelor's or higher with the children under 5 years old, aka they haven't been able to go to school yet. And the article likes to highlight the return to office mandates that a lot of companies have been enacting over the last 4 to 5 years. The COVID work from home methodology or status quo is breaking. And who's going to suffer the worst from this? It is the primary caretaker, the default, for better or for worse, mom at the house. What are your thoughts on this article, Ethan?
My thoughts was like I felt like they hit on the work from home a little hard. I think the more important factor is that like it's sometimes makes more financial sense for someone to stay home if the price of daycare is so high. If you're having to pay 80 grand a year for daycare between a 1 and 5 year old for 2 kids, and you're making 70, like it makes financial sense for a parent to stop working if the childcare expenses are so high, which I think is a more important factor. They mention it in the article, but I think it's a pretty big factor in that childcare is just astronomically expensive. There's not a ton of providers. You're having to fight for your spot to have a kid have daycare. The university in Mississippi has a university-funded childcare center that there's a wait list for people to be able to join. That is so popular because it's I think it's
Of course.
expensive in the grand scheme of things, but it's reasonably affordable compared to other options in Oxford. Um, and there just should be more options. When I was growing up, my mom used to tell me that the hospital that she used to work at used to have an in-hospital daycare for people working there that they got rid of because they didn't want to pay for it anymore. That I think that that's something that jobs like that, or it's just there should be more affordable options, whether it be government funded or job funded. There should be other ways to have your kid taken
I'm
care
going to
of.
hot take on the podcast, which is always a terrible idea. But if you have either two different thresholds, a double trigger, or like just the higher of the two, a certain percentage of women at your workplace, and you have X amounts, there should be on-site healthcare, like childcare. If you require them to work in the office and they have children, and especially if they're under 5 years old, like what can we expect? How are we going to even the playing field for women and get the wage gap closed up? And then if there's a certain amount of women, like let's have the government fund 50% of these things. Like we could do like healthcare. It's better than what we're doing now, which is nothing, and tie it to your employment so that there's a work. I love the Ole Miss one where you get to go. And I got a shout out to XYPN, the planning network that it's got a few hundred employees out in Bozeman. They have on-site healthcare. I remember hearing about that for the first time in like 2018 or 19. I was like, well, that's sick. Like, why wouldn't you have
Yeah,
childcare at the office? You can, if your kid has a problem, you can just stand up from your
you're
desk,
right
go over there,
there.
take care. Yeah. While we're at it, let's get the puppies
Um,
in the office, Ariel. Let's get the dogs in the
a
office. You hear me, sister?
a
She's got a
a
she's got a wiener dog. I've got a Aussie. We all work from home. We have a lot of working moms at BKFI.
we do,
I
we
imagine.
do.
I was trying to run the numbers mentally on the way to the podcast today. I think it's like I'd say 50% of the women that work at BKFI have kids, if I had to guess. But again, a lot of hot takes on the podcast. Some other fun things in this article were like men are doing a little like they're doing okay, but in terms of participation, by the way, it's from 2023 to 2026, so it's a limited scope is the timing on this, and it's a 12-month moving average on who is doing better and doing worse. And women with no bachelors and no children have the highest uptick in participation in the labor force. There's another cool graph here that shows you which states on a state-by-state basis. It's like a heat map. Share of children under age 6 living in a childcare desert. I never would have guessed that Texas is the lowest amount of children living in a childcare desert. Actually, Nebraska is the lowest. I thought these red states would have like no childcare. I don't know if they're doing something right there. They're doing better than New York and California and Oregon.
Alaska's 96.5%, which is pretty
Yeah,
sad.
you love Alaska. You were there. You've been there multiple times. No?
Alaska's a great state.
Yeah.
Yeah, I love it a lot. If you're into the outdoors, it's a great place to be.
Hawaii's at 96% as well. The whole deep south is a dark blue. It's like 50. I don't know what the definition of a childcare desert is, but I'm sure it's something similar to a food desert in terms of groceries. There's another cool chart that shows the downtick of women with it went down from 80% participation down to 77%. I will say seeing glass half full, in 2002, the same demographic that's suffering now was only at 65% participation in the labor force, and they're up to 78. So we were trending somewhere it's like your stock going from $5 to $25, and now you're upset that it's at $22. We still need to make sure that we course correct. But I don't know if these companies, like, we're not going to shame them into allowing people to work from home. Like, it's got to be a government effort, and universal health care
Yeah.
is going to be one of the few things that actually turns the tide on making childcare affordable. I'm happy to subsidize this as well. All right, enough virtue signaling. Let's get on to the next article. The man who runs the IRS spied on colleagues when he worked at JPMorgan. Now, this is a boogeyman article from the Wall Street Journal. Frank, I'm gonna butcher this pronunciation. It's very Italian. Lot of consonants. Frank Bisignano.
That was pretty good.
Sorry. Who runs somehow both the IRS and Social Security. How did this slip under my radar? I usually know who the IRS commissioner is.
But I think an article mentions that it's changed like 12 times.
Oh, that's good.
So, I don't think you should be surprised. I don't think the people that work there know who their boss is.
We're
So,
running this
um,
like the PMs of the Great Britain. We're just gonna switch them out. every few
And
months.
it's a new position. You know how we used to have the DoD, we now have the Department of War. We now
Oh,
have the
yes.
CEO of the IRS.
Dude, I can't with this stuff. I can't cover.
The naming is
I'm gonna
hilarious.
get upset, and we're
It's
already at 29 minutes. I don't think we should have people running. I can't. I'm actually. I've bashed on this industry or on this administration enough for today. Why don't we get into this Reddit article here? Experience with private market funds. What do you guys think? This is a really long post, but essentially it's a Redditor that wants to get exposure to private companies. And so, of course, they only hit the ones that have far outperformed, and listing the ones that he would like to get exposure to. Anthropic, of course. Stripe, of course. 11 Labs, of course. Open Evidence, I frankly have not heard of. But it's just one word, Open Evidence. And he said, hey, I want to get involved in these companies. I've got a big enough public company exposure with my ETFs. He lists the upsides, or he or she lists the upsides or downsides. By the way, this is in the Rich People PF, Personal Finance subreddit, which is a very fun subreddit. And they go on to list the upsides being exposure, additional diversification, as if being exposed to 3,000 stocks in the U.S. and a few thousand stocks internationally wasn't sufficient. By the way, if you talk to a CFA or really anyone at BKFI or anyone that's studied how much exposure you need to be fully diversified, the number of stocks you need to reduce your idiosyncratic risk and get the free lunch that is diversification is somewhere around 15 stocks. You don't need to get into private company stocks. So you can nix that off of the benefits of this. You already have your free lunch. But they do want exposure to the upsides of these private companies. They want to say that they got in at Anthropic at $10 and now it's at $225. I get that. We all have FOMO. But there are lots of private companies that never make it. Keep in mind that the way VC works is that 9 out of the 10 companies that they fund do not make it and go to zero. And then one of them is Anthropic or Stripe. So that's some fun stuff. And then we get into the fee structures. He lists out all the fees, 1.5%, which I'm surprised it's that low, frankly. The typical asset under management fee is only 1%, but lo and behold, there's an incentive fee. 15% of profits will go to the VC that they're looking at or to the fund manager that they're looking at. And it says similar to VCs 2 and 20. I think they mean to say like private equity or hedge fund management fee of 2 and 20. And then there's a illiquidity premium. There's an early withdrawal premium. Ethan, what was your takeaway on this?
I read through the comments.
I know we're so negative on this podcast sometimes. I steelman the article here for me.
I read the comments, and a lot of it was like the only people that are investing in these are people that are already rich, and the only thing that you can do is double your money and leave your kids a double inheritance, or lose half your money and then you have to eat that loss.
Yes.
And saying that like get your free lunch and roll with it that way. There's a couple comments about how the fees are pretty high. One of them is pretty funny. It was like, for those fees and risks, a better business plan would be to hire mercenaries to kidnap an Anthropic engineer and force them to give you their shares. So they're having fun with it. I think you don't need to try so hard. If you're already wealthy, take your free lunch, take the market. You don't need to wade in the complexities or the loss risk. And it is getting into these private market funds.
Yeah, 100%. I can agree with you, but if this itch must be scratched, let's hope that it is less than 10-15% of your overall portfolio. You can run with a core and satellite strategy if you like. Just make sure that the core is a big enough percentage that if it, because that's not going to zero. If your core and satellite strategy goes to zero, then you got much bigger problems. You got to make sure you have even more guns than Mr. Burhoff here on the call. Make sure you're going to survive that. And then your satellite, that's the one that you can tolerate, losing 30, 50, 70%, and you can hold until it goes back up or it goes to zero. So just bear that in mind, dear listener. And to have that size of a portfolio, the minimum investment for this guy is probably going to be somewhere between, it's going to be 6 figures, I'm going to guess. So that means that you divide that by 0.15 or 0.2 or what have you, and that means you got to have a multi-million-dollar liquid portfolio, 401ks included, IRAs included. Talk to an investment manager. Okay, Mr. Burhoff, anything else we should cover this week while I have you?
I think it was a good week. I enjoyed my beer. I enjoyed the articles.
I enjoyed your beer.
So,
I enjoyed watching you drink it.
overall, great day.
Great day. All right. Thank you, dear listeners. Thank you so much for listening. Email us your financial problems at liquidityevent@brooklynify.com, and we will read them on the air, answer them on the air. And finally, all of you stans can leave us a review if you want to be weird about it. Adios.